question. I mean, all names, HDFC Bank, ICICI, etc., flourished. Well, the first rates are up on your screen as we speak. It's what, 22,430 on the Nifty and 73,960 coming through on the Sensex at this stage. So these are the very first rates coming through. So it's acquired but higher. The Sensex is up 150 points nearly. So almost 73,940 or so there. Bank Nifty is starting 60 points up, 47,373, 53. So just sort of fast changing rates there. Market breadth, by the way, is just opening. So 650 stocks are higher, 190 are lower. But Sonia is on the wall with more rates. Sonia.
Well, thanks a lot for that. So it is a record high once again for the market, right? And it's looking pretty good as we speak. So just look at that. The Nifty holding pretty above that 22,400 mark. You have the Bank Nifty that's up almost about 60 odd points. And the advanced decline ratio also is well in favor of the advances, as you can see. Almost 1,300 stocks over there. I want to take it straight to the auto names because the numbers in the two-wheeler space have looked very good and we've seen good up moves. So Hero MotoCorp reported a 19% growth in terms of auto sales. That one reacted on Saturday as well and today too. Bajaj Auto, you have a JP Morgan upgrade on the target price. Target price has been raised to 8,900, so the stock is up about 0.7%. Angel One reported a good set of numbers as well. The client base was very strong, up almost about 61% year on year. So that one is gaining a bit of ground this morning. Apart from that, Gujarat Gas, Morgan Stanley has an overweight with a target price of 579 on Gujarat Gas. Looking good there, up almost about 0.5%. Steel stocks could be under pressure this morning as CLSA has downgraded Tata Steel and JSW Steel. Tata Steel has been downgraded to a sell from an outperform, JSW Steel as well. So those stocks are trading in the red right now. Torrent Power has won 2 contracts from the NTPC Vidyut Vyapar Nigam and the Railway Energy Management Company. So Torrent Power trending in the green as we speak. Maruti, we spoke to the management, so let's take a look at that. The management was actually very optimistic. So it said the company said that retail sales growth saw a double-digit growth in February and overall market share has gone up to 43%, so looking pretty good there. Godrej Properties, the entire real estate space has been booming. Godrej Properties will be developing a township in North Bengaluru and the estimation of that project value is 5,000 crores. So look at that, Godrej Properties up 2.5%. I'm also looking at stocks like PSP Projects, which has bagged an order worth almost 400 crores in Gujarat. Railtel has bagged an order worth about 88 crores from the State Transport Authority, and Swan Energy is also in focus, so keep an eye out on that stock. But otherwise, the market is looking pretty good. It's momentum, it's a momentum-driven market. 22,400 is holding, and the Nifty Bank as well is just about less than 3% away from lifetime highs. Back to you guys.
Well, that's right, Sonia. A few stocks in the broader markets that are moving around. Patel Engineering, well, they have secured a 525 crore Telangana irrigation contract with their JV partner. So that stock as well is up close to 4%, one of the top volume buzzers. SJVN, the green part of their business, has bagged a 200 megawatt GUVNL solar project. So that one as well is up close to 2.5%. On the flip side, a few stocks are falling on rather large volumes. Sigachi, that stock is down close to 15%. That's coming as one of the top volume losers. So just want to pull that stock out. Sigachi, the stock we don't talk about very often is 70 rupee stock. It's down 15%. HME Agro, that's another stock that's down close to around 10%. Balaji Tele is another one that's down close to around 7.5% as we speak. So a few of these stocks are getting a hard knock. Inox Wind Energy, not too high volumes out there, but that's down close to around 5% or thereabouts. So it's a good start for the Nifty. We're up close to around 40 points. The mid caps for the time being, the index is doing a relative underperformance. So let's see how that goes. The Nifty Bank moving towards that crucial 47,500, 47,600 mark. Few sessions ago, it went to this mark and from there saw a correction. So this time around, the markets will want it to get past this sum. Prashant?
The biggest volume-led gainer this morning is NTPC. NTPC is up 3%, so 352 coming through on NTPC. So I think there was an IFL note on Friday, if I'm not mistaken. Again, kind of taking a relook at many of these names, strong capacity addition initiatives on the thermal side, on the coal side. And of course, renewables is another story anyway. BHEL is up 2. So it's power actually. BHEL is up 2.25%. Huge volumes coming through. Nigel mentioned SJVN. Look at IEX. IEX is up 3.5%. It's coming up with large volumes. So the top 4 names are all power. In top 4 volume-led gainers are all power names this morning. Godrej Properties, I think we did mention. Naukri, that is InfoEdge, is up about 2%. sold off in the first hour of trading on Saturday and then reversed on in the second. Moil is up 5%, so that's manganese ore. It's coming up with large volumes, 296 on manganese ore. Indiabulls Real Estate is coming up with large volumes, 124 on that one. Tata Investment Corp is up about 5%, so 8,425. Big volumes. So that's Tata Investment. Sundaram Finance is up about 4%. Volumes are not that much. Nesco is up with another one, which is up about 4% or so. There's EIH Hotels, which is coming up with 3.5% gain. So, these are some more names which are coming up on this on the list. Steel, as Nigel pointed out, we were wondering on Friday, if you remember, in the last hour, what's happening with many of these steel names. Tata Steel is down 2, SAIL is down 2. Of course, reversing basically the big euphoric moves that we saw in Friday session. Varun Beverages continues to come off a little bit. So it's down another, I think, 2%, 2.5% right now. IREDA is down 2, RVNL is down 2, Havells is down 2, and Max Health, which went up 4% on Saturday, is back down again. Max Health is down about 4%. That's a large hospital name that we are talking about. More on this in a bit from now. But Anand Shah is head of PMS and AIF investments at ICICI Pru Asset Management Company. Anand, great to have you with us here on the program. Thanks very much for your time. Anand, actually, I want to start with that last group of stocks that I was talking about, which is the hospital names. Do you own any of these names? It's seen as a structural kind of a story. The need for quality healthcare is a felt need, and hospitals are getting more organized. Consolidation is happening. And of course, there is a lot of both brownfield and greenfield capacity addition in the sector. But recently, we've heard from the Supreme Court essentially asking the center to standardize procedure rates. We've spoken with some hospital companies, and they're actually saying if this is implemented, it's going to be pretty bad news for profitability. Just wanted your thoughts as an investor.
Hi, very good morning. This is part in a way as the per capita income moves, and we have seen this, the consumption of the household will also move. So while the last 2 decades belonged to the consumer goods, as we consumed soaps and shampoos and detergent powders, and even for that matter, autos and jewelries, I think the next leg of consumption growth as the country becomes prosperous, as the family becomes more prosperous, comes in services. So again, part of that is telecom we have seen, entertainment we have seen. But more recently, the 2 segments of the market where we see very, very strong growth post-COVID particularly has been healthcare, hospitals, and hotels. I think the incremental spending by a prosperous household, and we've been talking about K-shaped recovery and what's happening in the upper middle class and the rich segment of the market. I think these are the 2 areas. Second, I think penetration of health insurance. I think that's also a significant awareness has got created during the pandemic. And to that extent, that penetration is further helping and makes the certain surgeries affordable by virtue of having insurance. And lastly, even there are many insurance schemes for the lower middle class poor by state governments, by central governments, and that's also helping in terms of improving utilization of hospitals. So all in all, multiple factors coming together as the average household is able to afford these healthcare services, which were supposed to be premium, and obviously the awareness has increased. So to that extent, we have seen across hospitals, the utilization is improving, but more importantly, what's been driving profits of late is ARPP, as we call it, average revenue per occupied bed. And that's something which has been increasing fairly sharply, partly because of new surgeries that you are doing. So I think rightly so, both the hospitals and the government would be concerned that the healthcare should not become unaffordable for large segment of the population. And to that extent, there has to be certain middle ground where we can keep it affordable for the average citizen of the country.
Sure. All right. For now, the market is very quiet, so there's not too much happening. Just one thing that stands out is some of these power companies are doing very well. NTPC Power Grid The ancillary companies, Coal India, a lot of the PSUs are coming back in a big way. And although the headline index is very flat, there are plenty of stocks that are hitting fresh 52-week highs. So don't lose sight of that. Zomato, by the way, has been a stellar move. It's a fresh 52-week high this morning, fresh record high rather, for Zomato at 172 rupees. Tata Motors is almost inching towards the 1,000 rupee mark. So there's been a big move over there. Fresh high on Tata Motors. Data Patterns is another one that's up almost about 4.5% looking very good. And then a couple of other names also stand out. But, just coming back to the markets, Anand, overall, what is your view on how things are going to shape up from here? Because the narrative is that it's been very steady so far, but there are no major triggers that can take the markets further. Of course, there are the elections coming up, but many people believe that it's already been priced into the markets. Your thoughts on how things could shape up from here?
I think last 3 years have been stellar. Last 3 to 4 years, very clearly, market has rewarded earnings growth rate. If you've seen through the cycles, as and when somebody disappoints on the earnings versus the expectation, the stocks have been sort of corrected significantly. At the same time, more recently, if somebody outperforms on earnings or delivers positive surprise to the earnings, market is rewarded also. And case in point is many of these state-owned businesses and banks that have done very well, given that there was a huge valuation comfort. They were relatively cheaper than the overall market, but they delivered positive surprises to the earnings. I think from here on, I think the investor needs to worry about both the upside as well as downside. We've seen a massive rally in the cyclicals also, and obviously cyclicals in an upturn will deliver superior earnings growth rate, but will also have a sharp earnings degrowth also. So I think from here on, stock picking will be very important to be in the right segments of the market, right companies within that sector is very important. And to that extent, investor needs to worry about both the upside and the downside, both in the markets and the equities for individual stocks.
All right. Hi, Anand. Good morning. Since you spoke about cyclicals, let's talk about steel. How are you all placed out there? You know, the fairest names in the last week, suddenly they moved up, and they moved up on very large volumes. CLSA, they came out with a note earlier today, and they're saying that blast furnace production is going to go up. So they rather play the miners than play the fairest names. They're also highlighting that valuation-wise, things are not very, very cheap. How are you all approaching them?
I think, again, the valuations is relative. And to be very honest, the steel manufacturers in general didn't do well through the calendar year 2023, given that the largest consumer and the largest producer of steel, which is China, had a very challenged time in terms of real estate and to that extent the demand. So I think it's been a laggard. 23 has not been great. And to that extent, the valuations were relatively reasonable, and they've sort of been caught up, or in terms of it's gotten attention of the market, given it's been an underperformer. To me, we've been overweight steel in particular within the metals and across miners and steel manufacturers. We've been positive for the simple reason that over next decade, we are going to see, as China becomes more prosperous, its ability to compete in the international market should only diminish over time. And to that extent, overall, the profitability of steel sector in general globally should improve. As China also decarbonizes, moves from blast furnace to electric arc furnace, that would also make it that much more uncompetitive on pricing. And to that extent, globally, we will see a better profitability for the steel industry next decade versus the previous decade. That's one positive. Second, a lot of companies in India had a very rough time through the decade. They have corrected, done the course correction, and that's also one positive for the individual companies that we own in our portfolios.
Got that. By the way, Anand, just a few more names I want to highlight for our viewers, which are starting to move now. Data Patterns. What a move it's been having. I think a week ago, a stock was at 1,800. Not actually a week. I mean, I think 2 weeks maybe. But yeah, it was at 1,800, 1,780 or so on the 14th of February. From 1,800 to 29, almost 3,000 rupees now on Data Patterns. It's just a tremendous move recently, and it's moving up as we speak. Another 8%, by the way, coming through. Saturday was strong. Last Friday was strong, and of course, I mean, you had 2 or 3 days of weakness before that. and the price was up before that as well. So, very strong. Volumes as well. Power continues to be the big theme. BHEL is up 5, NTPC is up 3, IEX is up 4% or so. And Zomato is the other one. Zomato has been doing well. Numbers, remember, for the third quarter were strong. The stock, of course, deterred after that a little bit, but mostly has been moving higher. So keep an eye out on that one as well. Oil India is up another 2.5%. Moil is up another 4%. So these resource companies, right, especially on the government side, they are doing well. Policy Bazaar, by the way, since that the in-principle approval for the reinsurance business came through, that's up another 2.5% this morning, and of course it's done well. So a week back or so, it was under 1,000, 1140 now on Policy Bazaar. By the way, overall market breadth is flipped into the negative now. So 1,250 stocks are lower and about 900 stocks are higher right now. Anand, across sort of sectors and, what kind of sort of changes are you making incrementally to the portfolio? Because what moves up with such ferocity that it kind of goes into from undervalued to overvalued in, a few weeks or so. So then you got to look for newer ideas. Is that something you're doing, and what exactly? If you can give us a flavor.
Well, indeed, it's in a very interesting market. You are able to create wealth in old economy stocks as well as you named few of them. Even in the new economy stocks, there are various opportunities. So it's a very interesting market. We've been more bottom up. Our portfolios have remained overweight on manufacturing stories and the businesses which are allied to manufacturing, select banks that we have been owning. So our portfolio has been more or less stable, and we've been continuously scanning the market, both growth businesses as well as value businesses. We will find opportunities wherever, as I said before, earnings growth. I think what's been key in getting the markets right has been which are the businesses which are able to grow. India will be always watched upon as a growth market by both domestic investors, but more importantly from foreign investors also. And to that extent, where are we seeing earnings growth rate? And to that extent, even we are not surprised that mid cap and small cap have been, despite of our fears and premium valuations at which they're trading, it's attracting that much more capital because there are select, again, the word is select. There are select mid and small caps which are growing earnings far faster than what market would have expected. So overall, we've been watching more bottom up, not so much top down, given that most of the themes that we believed were value has played out. So it's more bottom up, individual businesses, both in old economy, new economy. More importantly, beyond manufacturing allied, the consumer facing services business is also another area where we see a long runway for growth, both organized retailing, hospitals, health, and so on.
Okay, Anand, thanks for stopping by and filling us in with your views on a whole host of sectors as well as on the markets. Wishing you a good Monday ahead, and we'll chat with you rather soon. Let's invite our next guest then, IREDA. The stock has seen a big surge post its listing, though from the top it's seen some bit of a correction. Their past quarter's numbers were good, with robust loan growth, which aided the margin expansion. To discuss more on the company's business prospects and the outlook ahead, Mr. Pradeep Kumar Das, the chairman and MD of the company, joins us on the show. Hi, Mr. Das. Good morning and good to see you in. Mr. Das, in the past you have been guiding for at least a 25% growth. As of now, your AUM, I think, is close to around 50,000 crores odd. So how long can you maintain this sort of a growth, if you could give us that? And by when will you need capital to raise some capital to fuel this sort of a 25% odd growth from here on?
Yeah, very good morning, and thank you for inviting me here. If you see our track record of 37 years, we are constantly and continuously growing. And if you see particularly the 3.5 years, we are growing more than around 30% CAGR kind of thing. So 25% growth, we are confident to maintain. And anyway, as I told earlier also, we do not focus on numbers. We focus on qualitative governance and timeline in committed delivery. So that is our core strength. Being the most specialized in the agency in this space, we are the most preferred lender as far as emerging and new technology is concerned. And if you see, we are growing continuously. And what I have been talking during our roadshow also, that we are continuously reducing our net NPA. So which was around 2 during IPO, and which is already come down to 1.52 in the last quarter. And we are confident of growth as well as reduction in NPA in the time to come.
All right, Mr. Das. Yeah, Mr. Das, that's kudos to you and the team as well for bringing the asset quality under control and even improving it even from there on. But when would you require to raise capital, sir? You know, you're going to be growing at 25% as you're saying. Will it be in the next 18 months? Will it be after 2 years that you'll have to come and raise some capital?
See, we'll be always looking for keeping a CRAR of around 15, 16, not certainly to 18. Okay. So in order to ensure that we are having AAA stable rating by continuity. So more important for us that we maintain the asset quality and we maintain the rating and we continue to borrow at the most competitive rate. And if you see, earlier our constraint was our net worth. Because of that, almost 3 years, it was stagnant kind of net worth around 2,300 to 2,400. So post infusion of equity, 1,500 crore, and post IPO, we have already crossed around 8,500 crore. So we are confident that we'll be growing as well as and when it will be required. And maybe I can't tell you the timeline, but if in order to ensure that we are maintaining the LDCRA, we have to come to the market again for APO kind of thing. But before that, we'll be resort to alternate sources of cheaper financing. If you see historically, we used to enjoy a fair amount of forex resources in our total resource requirement. If you see 3 years back, our resource composition was more than 50%, 55% in the forex space, whereas the domestic used to be around 45, 47%. But today the scenario has been last 3 years, we have heavily borrowed in the domestic market because the landed cost was becoming cheaper in the domestic market. But since the new and emerging technology, we have to look for blended finance and alternate sources of green funds from overseas. To keep that in mind, to cater to the need of our Indian developer as well as the Indian developer setting up project abroad and those who are having project in India having export potential, to cater their requirement, we are opening shortly, maybe in April or May, our office in GIFT City. We have already got the NOC from RBI and the process is on. So that segment will be saving almost 3.5 to 4.5% of aging cost. So aging was becoming the main factor for making the landed cost of forex funding costlier. So that is one source. And again, in the retail segment also, we have started retail doing since more than a year. But if you see in the rooftop solar space, we have already financed in the C&I said 567 crore sanction. And 315 crore we have already financed. And so also agricultural sector in Kusum, we have already sanctioned 178 crore and
Mr. Das, we'll come to some of these individual sort of segments, but very exhaustive kind of summary you've given us. Good morning, Prashant this side, sir. Sir, could you tell us what is the exposure for you on the wind side? What is the
around 30% of our total portfolio
is wind, right? Now, I just wanted to ask you, there are news reports which say that for the wind sector, the government has written to states to once again implement the reverse e-auction method. I mean, this was sort of done till 7-8 years back. There was a lot of irrational bidding, etc., which had taken place. The sector then went through a bit of a slump. And then, of course, it was junked. The method was junked, but it's back now. I just wanted to get a sense from you as an important financier to the sector. What do you make of it?
See, if you see solar, the bidding is going on and it is successful so far. You are right, in the past, the wind, it was not. But I think now the developer, policymaker and lenders all are at same pace. And both all are working in a very transparent manner to see the real space for each other in the economy. So instead of looking into a greedy way, going ultra competitive and cutthroat competition, that sustainable competitive price should emerge. So that is the key now onwards.
So you don't think that like it happened in the past, it will lead to irrational bidding in the sector?
I feel it. We believe that it will be rational bidding now. Irrational bidding will not be there because we have seen what is the outcome of irrational bidding in the past.
Okay. And is that also maybe so because there are fewer players? I mean, there's been consolidation. Some of the weaker marginal players are out of the system?
See, that happens in every industry. And ultimately, those who have fundamentally solid and sound principles and practices, see, ultimately, governance is the key. Why you will get into that unrealistic competitive price? That means you have governance issues. You do not have long-term planning. And we know that the renewable energy space is going to be there for at least 20, 30 years down the line because our future energy we have to meet from renewable new sources.
Got
and,
it.
Every unit, we need 90% from there only.
Yeah. Mr. Das, any reason why this has been brought back, sir, now in your assessment, the reverse bidding method?
See, ultimately, we have to have competitive price and in a transparent manner. And second, we need to see a balancing. We need to have round-the-clock power because if we talk about the new and emerging space, where we have to depend fair amount of requirement, that is in a sense towards green hydrogen and its derivative, we require continuous power. So we need to explore fully solar, wind and hydro along with pump storage so that we can have continuous power so that new and emerging green hydrogen and its derivatives, which is going to become a complete game changer because we have huge requirement. Yesterday, already our Viksit Bharat program announcement by government has already been announced. By 2047, how in a strategic manner we will become a developed economy. And for every development, we require energy. And for energy, we have to depend on new and non-fossil sources only.
Okay. Mr. Das, good morning. I just had a couple of questions. Earlier, you said that you're doing a road show. Can you tell us how much of fundraising are you looking at, say, over the next 1 year?
See, we want to fully leverage, as I said, our always target is to fully leverage. So we can go to 7 times of our equity. So road shows, we will be targeting to the overseas road shows, as I said, to look into the cheaper and blended sourcing of financing because domestic market in anywhere 3.5 years we have been doing and it's a quite competitive. Globally also that, but post our listing, we are better known in international market as a pure play green finance house, which was not known to all in true sense and spirit. So we want to encash that. With that context, I had said that we have to go to the roadshow and explore the alternate and cheaper sources of funding because key is how best we can reduce our cost. Because lending market is also new and emerging. More and more cheaper finance we make them, enable them, the faster the sector will develop. And we being a responsible agency and sole arm of MNRE, which is focusing on new and renewable sources of energy,
so, Mr. Das,
we have to get in that mind.
Okay, so you're saying that your intention is to remain fully leveraged at 7% of equity, but do you have any number in mind on how much the fundraising that you're looking at?
If you ask honestly, 3.5 years, whoever is asking, we say that we don't believe in numbers. We believe in quality governance. The numbers is following us.
All
if
right.
you see, we are trying to always fully leverage.
Okay, got it. And just 2 more questions from my end. One is on the net interest margins. What is your expectation as we move along over the next 1 to 2 years? And also, you were talking about this loan growth, right? Is this something that is sustainable over the next 1 year or so? What is the average loan growth that we can expect?
If you say the NIM, it is slightly going down because of the obvious reasons. As I said, the new and emerging, if it is green hydrogen, pump storage, e-mobility, because e-mobility is quite fast emerging. So unless we have some lower cost funding to them, the sector cannot grow fast. And we are trying to build on the volume. Our book size was earlier only 22,000, 23,000 crore. We have crossed 54,000 crore. So now we have an asset mix kind of thing. That 60% to 70% of our assets are traditional RE. 30 to 40% assets are emerging RE, where we are having fair amount of good NIM as well as our bottom line is up. But since our asset quality is much better, our provision coverage ratio is quite low vis-a-vis the other NBFC who are working in this space. Quite low if you compare. So when you have lesser provisioning requirement, our bottom line is automatically getting up. So not only one should look at the NIM, they also look at what kind of lower provisioning coverage we require.
Can you give us a number, sir? What NIMs can you do? I recall you telling us that your ROA will be headed towards 2.5%. So by when? NIMs, targeted ROE and ROA, sir. We'll wind up the interview after that. Just wanted these three numbers.
So if you see our last quarter, our NIM is 3.2.
Yes.
And spread is around 205.
Yes.
2.05. And we'll try to sustain that and further improve. See, recently post-listing, our net worth has gone up and we are known in the market. And already our borrowing in the domestic market, we are getting 5 paisa vis-a-vis the others, the lesser rate. So in the time to come, maybe another couple of quarters, probably will be reaching during that period, but difficult to commit on any number now. As because despite being in 37 years, we are not that much known in the market that we are the only green power play, green finance company.
So the endeavor is to hold your NIMs at around this 3% plus, and the ROAs will hit 2.5% in the coming fiscal. We've got that correct, right, sir?
Right.
It's a pleasure talking to you. Thanks so much, Mr. Das, for joining in and filling us in with all of those details. For the time being, though, we'll slip into a short break. On the other side, we'll have Mr. Vinod Agarwal of VE Commercial Vehicles to join in to talk about the past month's sales numbers. Later on, we'll also connect with Mr. Rajat Katuria of Signature Global to talk about their luxury residence project in Gurugram.
Welcome back to Bazaar Corporate Radar. Let's talk about Eicher Motors now, which is under pressure on the back of its February auto sales performance. The commercial vehicle sales have slowed down across the industry. For Eicher also in February, CV sales surged nearly 2% and it didn't surge, it just went up 2%. To discuss more on their February performance, Vinod Agarwal, the MD and CEO of Volvo Eicher Commercial Vehicles, joins us now. Mr. Agarwal, thanks a lot for joining in. You know, we've been speaking about this ad nauseum as to how the commercial vehicle industry has faced a slowdown over the last couple of months. Your own numbers were a low single-digit growth, but some of your peers have actually reported a big degrowth in this month. What is going wrong, and when do you see a recovery in the commercial vehicle sector?
Actually, I will not say it's slowdown. It is because of the large base impact. Because if you look at last year quarter four was very strong, and there was also some pre-buying that happened due to BS6 stage 2 norms that became applicable from 1st April. So as a result of that, last year quarter 4 was extremely strong. In fact, if you now look at the March figures, March 2023, March 2023 was even stronger. So therefore, you will still see lower sales in the current month as compared to March 23. So therefore, I would not say it's slowed down, because if you look at overall YTD figures, if you look at heavy-duty trucks, still there is a growth of 6%. In buses, there is a handsome growth of 32% YTD. Even last month also, the bus industry grew by 31%. Light and medium-duty trucks and small commercial vehicles, both these segments, they have dropped by around YTD basis around 4 to 5%. That also because last year itself, these two segments were at the earlier peak of 1890. So therefore, I would not say it a slowdown. I will say it is a technical correction, and you will see growth coming back. That's what my feel is.
Okay, so you will see growth coming back, and you're saying because of the large base of last year, the growth percentage looks very small. Got it. But you know, even if you look at year to date, the entire CV sales for your own company, right? It's barely been a 10% growth, 9.7% to be precise. When do you see double-digit growth come back for Volvo Eicher? Will it be in FY24 itself, in the early part of FY25? And what are the big trends segment-wise, according to you?
I think, first of all, this 9.7% growth in the current situation is a good number. It's almost equal to double digit. And we have been growing better than the industry. If you look at all segments, our growth has been better than the industry growth. In heavy duty trucks, in fact, our growth is almost 17%. And light and medium duty trucks, where the industry had dropped by around 4.5%, our growth is around 4-5%. So therefore, it is a mix of all these segments, due to which you see 9.7%. But of course, if the industry grows better next year, we should continue to do better than the industry. That's what our objective is, and we are very, very optimistic.
Can you give me a number, sir, for FY25? You're saying you'll do better than the industry. What could the industry growth rate be, and what would Eicher's growth be in FY25?
I would say industry growth should be almost like double digit or around that. And we should also be better than that. I can't give you the numbers, of course, because it's very difficult to project that how much it will be and how much we will grow. But of course, all our strategies, if you look at our product range, we are continuing to expand our product range. We are continuing to expand our network. So therefore, these are all the steps that will help us to grow better.
Okay, the reason I asked you this question is about industry growth is that, some people in the market believe that the CV cycle has peaked for now, because we had 20-30% growth in the last many years, and that slowdown is now kicking in. You may call it high base, you may call it moderation growth, be that as it may, there is a narrative in the market that the CV cycle has peaked. Would you concur with that view?
No, not at all. Because you study the trends of any past recessions. Whenever the recovery has happened, the recovery has led to a new peak. We still have not reached the earlier peak. So the growth has been going on for last 2 to 3 years. And still there is a lot of scope for growth. And fundamentals are very strong. If you look at the economy itself is the biggest factor of growth. Then replacements are continuing to be very strong. And third is infrastructure investments. All these fundamental factors point towards a better situation for the commercial vehicle industry. Therefore, I do not agree that it has peaked. You will still see more growth in CV sector.
Okay, hi, good morning, Mr. Agarwal, and good to hear your optimism. You have repeatedly said that you don't believe that things have peaked and things will improve. So good to hear. Give us a couple of numbers though. Since you're growing faster than the industry, what is your updated market share in various segments? Point number one. Point number two is, I recall, a few months ago, we had a conversation where you said there is scope to improve margins even from there, from, I think, that high single digit number. Tell us, is that still on? If yes, what could the number be? So on market share and margins, please go ahead.
First on the market shares. In heavy duty trucks, our market share is now 9%. It was 8.2% last year. And in light and medium duty trucks, which is 5 to 18 ton, our market share currently first 11 months is 34.5%. Last year it was 31%. And in buses, our market share is 24%, both light and medium duty and heavy duty buses put together. So therefore, market shares are improving. As far as the margins are concerned, margins also are better as compared to last year. But of course, we would like it to be even better. Still, EBITDA margin is around 8% plus, and operating margin after depreciation is 5% plus. So we would like it to improve further. But
okay,
of course,
all right, we leave. Sure.
All right, we'll leave it there. Thanks very much for joining us. And good to hear that commentary. Thanks very much for your time. Well, let's move on. Signature Global is the next company that we are speaking with. Now, Signature Global is its luxury residence project in Gurugram has registered record sales worth 3,600 crores ahead of the official launch even. We have the management with us to talk to us about this. Rajat Kathuria is CEO of the company. Rajat, great to have you with us here. Appreciate your time. So this project, even before the official launch, you've sort of garnered such large interest. Can you tell us what is the ticket size of this project and a little bit more in terms of details?
Yeah, so thanks, Prashant, for calling us on your show. So yeah, I think we've got a very good response from the market on this latest project offering. This is about 2.7 million square foot, development, which we are coming up with just off the Dwarka Expressway. And quite a pleasant coincidence that, the Dwarka Expressway is expected to be inaugurated within this month itself by the Prime Minister. So it's a good coincidence that, the project got launched and we were overwhelmed with the response is the word, more than 5 times subscription we got. And it's reasonable in terms of value as well, because it's almost like 3,500 odd crores of project. And we wish we could have many more units, but we had about 1,000 units. They were all, taken up in a very short time.
What's the rate per square foot rate that you sold this at?
Yeah, so the base price is at about 13,000 rupees a foot, and there are few other charges on top of it.
Okay. In terms of your portfolio, what is luxury going to grow a lot faster? I'm not sure. This is because you've started and made a name for yourself operating in the sort of mass segment, right? But is there a bit of a shift happening overall?
So, Prashant, so we started with affordable housing. First 5 years of our existence, we only did affordable housing because, those days it was tough to sell any mid-income product. As of today, we would call ourselves a mid-income, segment player. Mid-segment being a slightly broader spectrum, product starting at about 70-80 lakhs to 1 crore and going up to 3 to 4 crores. So, that's the segment we play in, depending on the micro market and the product. So we have pivoted from the mass segment to mid-income segment, and our focus will remain in mid-segment itself.
Okay, how much of your sales currently comes from mid-income and how much from luxury? If you can just give us the breakup.
So I'll prefer to call this as mid-income again, so so in the first 9 months, we sold about 3,100 odd units and achieved about a little above 3,100 crores of, pre-sales revenue. In this quarter, again, we are definitely crossing 3,600 because this project in itself is worth that much. But this is all mid-income, whether it's 1 to 4 crore ticket size, depending on what product it is and where it is. So this is slightly larger units, and that's why you thinking that it's luxury, but it's actually mid-income in the relative context in the market.
Wow, I love how the definition of mid-income has changed in the last 10 years, right? 10 years ago, 1 to 4 crores would definitely be in the luxury space, but no, not anymore. That is mid-income now. Got it. But are you going to be looking at any new geographies? I understand that you're largely present in the NCR region, but so many of your peers, national level players are now, moving to newer geographies. Anything that you'd be looking at either on your own or via joint development?
No, not in any time in immediate future. We intend to stay in this location. We are Gurugram and Sona focused company, and we want to play this mid-income segment itself. And to your earlier point, I agree the definition of mid-income has changed, but in a growing economy, income levels have also grown. So this is very much, and mortgage availability is much higher than what it used to be. So, this is kind of, the new mid-income spectrum, the way we look at it. But our product and geography focus is going to remain the same in the, upcoming future.
All right. Hi, Rajat. Good morning. Rajat, your pre-sales for the 9 months, I think around 3,200 crores. You had earlier guided for around 4,500 crores for the year. How much better are you going to do by the end of this year in comparison to the guidance given?
So now, it's all public. So yeah, definitely, we'll definitely cross about 7,000 crores in terms of pre-sales. So if you really look at the trend between fiscal year 21 and 23, it took us 2 years to, double our sales. FY21, it was 1,600. In FY23, it was about 3,400. But during this year, again, we are more than doubling our sales within a span of a year itself.
Okay, all the best. Rajat, thanks a lot for joining in and speaking to us. That's Signature Global, big beneficiary of the rise in luxury residential projects, but they don't call it luxury anymore. It is now part of the mid-income segment, but a big boom nevertheless. But let's get back to the market. It's very, very quiet. It's a quiet Monday of trade. Mitesh Thakkar is back with us. Mitesh, one space that's really shooting up today is capital goods. BHEL is up almost 10% and big volumes flowing into that name. Any thoughts here at 260? How is the risk reward? And overall on the market, what are you looking at?
Yeah, I think BHL, if you look at the chart, had a high of around 230 way back on 5th of Feb, and since then was about 3.5 weeks of consolidation, which the stock has broken on the upside today. The first target was around 260, which has been met, but I suspect the way this breakout is playing out, you can pencil in targets in excess of 290 here as well. So if somebody's holding out, hold on. A fresh entry post a 10% rally is not the best idea, but I think, yeah, somebody has the positions. I think hold on for targets of 290 and revise your stop loss to about 244. Having said that, these stocks that are on my buy list right now, I think Lupin is something also which is breaking into fresh highs. So that's a buy with a stop below 1632 for targets of around 1705. And the other stock which I like is Bank of Baroda. It's come off the highs, but the structure is quite positive. So slowly buy here with a stop below levels of 268 and a target of around 282 can be looked at.
Okay, coming back to you for more, Mitesh, but thanks very much for that. We'll take a break here. We put the focus on what's happening in commodities. Manisha will be here with that in just a bit. Stay tuned.
Welcome back. We have Manisha Gupta now joining in to tell us more about the commodity markets. Manisha, what's the one commodity you're tracking today?
Well, not taking my eyes off the crude oil prices because we seem to be breaking newer range here. It has been facing stiff resistance at $83 a barrel for some time now, but we are trading at a 4-month highs right now for the crude oil prices. OPEC has done what it was expected to do. They have extended voluntary production cuts until the end of June. And the numbers that you're looking at are higher for the voluntary cuts coming in from Saudi Arabia as well, which has extended output cut in the second quarter of 2024 as well. Russia seems to have come out with higher numbers this time around, announcing a 6-month ban for the gasoline exports for the next 6 months, that starts on 1st of March. And also Russia is going to trim further production in sense of 471,000 barrels per day there. So a couple of statements coming in from Russia, which really seemed supportive for the crude oil prices going forward. So when you look at the Ural prices, those also are trading on the higher side. The other countries within OPEC like Iraq and UAE also have confirmed that they will continue to cut the quota that has been assigned to them for the next quarter as well, and that has been supportive. The markets are looking at the US gasoline stocks as well, which are right now 2% below 5-year average. So the physical demand for gas in the US also seems to be climbing there. Important is the demand outlook for the rest of 2024, where OPEC continues to be quite bullish at 2.25, but 1.2 to 1.9 million barrels per day of day demand in 2024 is what is coming in as estimates from Wood Mackenzie and IE as well. Interesting also is on what the Wall Street banks and brokerages are reiterating in sense of their price forecast for this year. We still have it on the lower side between 70 to 90 for Goldman Sachs. 74 is what Citi is sticking to. $83 a barrel of an average in this year is what we could see is what JP Morgan is saying. But we have a couple of bullish reports in the last week come in from Bank of America and Stan Chart. For the second quarter of this calendar year, $94 to $95 of an average is what they're anticipating for the Brent prices going forward. So some support in here could continue.
All right, Manisha, thanks very much for that. That is commodities in focus. We'll take a quick commercial break here. Our special segment, it's the economy, comes up next. My colleague Lata will get chatting with Paul Gruenwald of S&P Global to talk about his latest report on the global economic outlook. Stay tuned.
Welcome to It's the Economy. Under focus is the global economy. Now, global economic growth is likely to surprise on the upside, despite the 400-500 basis points rate hike taken by most advanced major economies over the past 2 years. And the jury is still out on whether the US and the world economy will manage a soft landing. That's the sum and substance of some recent reports by Paul Grunwald, the chief economist, global chief economist at S&P Ratings. Paul today joins us to examine how the world economy is shaping up and whether he spots any headwinds that can slow down India's scorching pace of growth. Paul, good morning, and thank you very much indeed for your time. Actually, I want to speak about various regions of the global economy, but today what compels our attention is the Chinese economy. The leaders have gathered to perhaps announce a set of stimuli for the economy. It's a much-awaited meeting in China. What's your expectation from this meeting itself? Should one expect some fiscal and monetary boosting steps?
Well, first, the Chinese authorities over the past few years have taken a much more measured approach to stimulus. We can all remember back around the time of the global financial crisis, where there was an enormous stimulus that raised Chinese and global growth. But during this particular slowdown with the property market under stress, they seem to be much more precise and measured. So we'll see if anything comes out of this session. China's trying to balance fixing the property sector and making sure those homes get built with making sure there's a sufficient financial discipline in the sector. So we'll be watching to see how they balance those two concerns.
Okay. Well, just a little more on China. What repeatedly economists tell us is that China is likely to be a disinflationary force because at the moment they are still investing in manufacturing. Yes, infrastructure is the one that's created all these ghost towns and property problems, but China's surging full speed ahead in manufacturing. Your thoughts, is it likely to continue to be a disinflationary force?
Yeah, I think disinflationary is the right word. We have some difficulties with calling it deflation because the deflation is actually happening in a small number of sectors, particularly food. But and outside of the housing slowdown, there's decent demand in China, but they clearly have a demand problem. They clearly have a confidence problem. We still think they can pull, a 5-ish% growth this year. But again, we're watching to see if we're going to get some more stimulus out of the current meetings in Beijing.
Okay, so does China be a disinflationary force for the world, as in, in terms of iron ore, steel, and even manufactured goods? Apparently, they're manufacturing at a feverish pace for the global economy. Does that continue to keep prices down for the world, manufactured as well as raw material?
Yeah, it does. It does in some sectors, but let's remember the global challenge we're facing on inflation is actually services and non-tradable. So if you look at the major central banks, they are seeing lower inflationary pressures on the goods side, but it's really the services side where we're having the inflation problem. So yes, China, I think, has historically been kind of a strong manufacturing and even perhaps an over-manufacturing economy, putting downward pressure on goods inflation. But the real concern continues to be services inflation for the major central banks.
Okay, no, I take your point. But I'm persisting with that question only because in India we are facing absolutely lower and lower core inflation, and it's only food that's kept inflation higher, and India worries that core inflation may start looking deflationary. But I'll come to India in a minute. Tell me about how you're interpreting the US economy. A lot of jobs data, the JOLTS data, non-farm payrolls, everything is due later this week. But are you sensing that it's going to be higher for longer in terms of rates? And how do you see US growth itself? That's the one, as your report puts it, has been, hugely surprising on the upside.
Yeah, that's right. There's been a huge surprise from the U.S. growth. We've seen all major central banks, as you noted, raise policy rates by 400 or 500 basis points. We were expecting that to slow demand. We've seen that in almost every advanced economy except the U.S. The U.S., we just raised our growth forecast, as you mentioned, up to 2.4% this year. A couple of reasons for that. One, investment seems to be quite robust in the U.S. Part of that's public with the Inflation Reduction Act, but that seems to be crowding in, not crowding out private investment. And also we see very robust small business formation in the U.S. And on top of that, we've got a lot of fiscal juice or stimulus in the tank. So that's powering U.S. growth. And it's now outperforming the advanced economies by a high margin. And to your question on rates, we've thought all along that the Fed's going to be cutting cautiously. So we maintain our view that we probably get our first 25 basis point Fed funds rate reduction in June and maybe 2 more this year. But we think the climb down from the current level of policy rates in the U.S. is going to be gradual and take some time.
Okay, just a word more on the U.S. fisc. I mean, they are staring at a debt ceiling and a shutdown. And the latest that's come out over the weekend is that some kind of a package is in the offing to allow spending up until September. I mean, up until the elections, I would assume. But what's your reading? You think the fisc will lower at all in an election year? And if it doesn't, are we going to see higher yields in the longer tenor because more paper is going to be issued?
Yeah, right. Well, the U.S. has this unusual, I guess, split between the spending decision and the funding decision. And as you mentioned, there are now discussions in Washington. That particular system is kind of tailor-made for drama. So we've seen this movie before, and it's usually the case that, cooler minds prevail and we get some sort of agreement. Looks like that's going to happen again. We do not see a big fiscal retrenchment this election year. That's probably true for most countries where you have an election year. But, demand for U.S. treasuries is still pretty strong globally. Demand for the U.S. dollar is pretty strong globally. Yes. So despite the large deficits in the U.S., which are helping growth, we don't see any big moves toward bringing in the deficit in this election year. 2024, we'll have to see what happens in November and then reassess for next year.
Okay. Any view, therefore, on U.S. yields? I mean, the 10-year, which is, of course, the world's benchmark, does it, is for the bottom? Does it continue to surge higher?
Yeah, it seems to be range bound, right? We dipped toward 4 for a while. Now it seems to be in the 4 to 5 range. But again, there seems to be pretty robust demand for the 10-year. It remains, as you said, the world's benchmark and risk-free assets. So, as far as we can tell, at least for now, there's no real change to the robust demand for U.S. government long-term paper.
Okay. Now, therefore, how would you, pitch the global economic ecosystem for India? We had this steaming 8.4% growth number announced for the third quarter. And thereafter, immediately after the announcement, the chief economic advisor, Dr. Anant Nageshwaran, had a press conference where he said the only danger is the global slowdown. So is there a global headwind at all for India?
Yeah, there'd be a modest, I think there's probably a modest headwind for India and quite frankly, other countries, but we're still pretty constructive on India. Our chief economist for CRISIL, Dr. D.K. Joshi's got Indian growth this fiscal at 7.3 and then 6.5 next year. The risk would be a material global slowdown. But what we've seen so far over the past year or so with the large rate hikes, again, is that services spending has held up, labor markets have held up, and the damage to global growth has mostly been on the manufacturing side, and that's more sensitive to interest rates. And obviously, the largest economy in the world, the U.S., is going to be central to that view. So after 400 or 500 basis points of rate rises, of course, we're going to a period of slower growth. But as we all know, India is largely a domestic-led economy. Investment, which has always been the question mark, seems to be going well. So that points to a pretty robust, next couple of years in terms of growth.
Okay, can you repeat, how do you see Indian growth itself? Does next year get better than this year? This year itself, the APEC statistical body is forecasting 7.6% for the fisc, not for the year, for the fiscal year. And what is the S&P forecast for next year?
Yeah, for the fiscal 2024, we've got 7.3, and then we've got 6.5 for next year, and then maybe a bit more than that over the medium term. As we've discussed, next fiscal year is going to be a bit slower than the one that's ending right now. And again, That's the global slowdown. We do expect the U.S. to eventually slow down, but that's contingent on rates higher for longer and some of the steam coming out of that economy. But the global environment facing India is not bad. And again, we've had this period of good growth, and it looks like 6.5 to 7 is our estimate of trend growth throughout the rest of this decade. So that's a pretty good outcome.
Good to hear the number 7. Just a quick last question. You don't see any financial red flags, do you? You allude in your paper to reset of interest rates. And in the US, there is a large amount of fixed rates, and therefore the reset hasn't hit so far. But do you think resets can create a financial sector problem?
Potentially, if they happened abruptly. A lot of folks are focusing on commercial real estate, and we do have some structural weakness there from working from home and other shifts for commercial property. But those resets happen in a staggered period over a number of years. There's not really a big wall where all of those rates reset. And our banking teams are looking at the types of financial institutions, let's say local and regional banks, that have outside exposure to commercial real estate. But their view right now is that it's manageable. There will be a period of rate resets. We call that the maturity wall, and that's going to last for a number of years. But firms know that's coming, banks know that's coming, regulators know that's coming. So we think that this should be manageable for the system, but it's obviously something to watch, especially if rates stay higher for longer.
Okay, and just a last word on crude. Do you expect that to remain under control or throw a nasty shock for economies like India?
Yeah, crude. Yeah, I saw your previous segment. I mean, my team is not in the oil forecasting business, but that range of crude prices you saw in the neighborhood of 80, that looks sort of digestible for the global economy. That's roughly our baseline forecast. So as long as we don't get any geopolitical shocks, which is always a risk, we don't see that's going to be a big kind of needle mover for the global macro.
All right. Thank you. Thank you, Paul, very much for interpreting a whole host of global cues for us. Have a great stay in India. It's a pity we didn't have you in the studio.
Next time, maybe.
So that's yeah, sure. So that's the word coming in from S&P. The world could actually surprise on the upside in terms of growth, especially the United States. So, we don't have to worry too much as, global growth being a headwind. So let's turn back to the markets. Indian markets don't have much to worry about global macros. So what are the stocks on the move? Vivek is joining me now to tell us 2 stocks that he's tracking and which are steaming, or rather, I should say, powering ahead today, Vivek.
Well, absolutely right. Powering ahead is the right word. Actually, what's happened is very clearly power sector capex is back, well and truly back. So over the weekend, NTPC updated the exchanges saying that the board has gone ahead and approved an investment for a super thermal critical power plant. So what is the total capacity of this particular plant? 2 into 800 megawatts, so total capacity of close to 1.6 gigawatt. What is the total cost of this particular plant? This total cost is in excess of 17,150 crores. So it's a very large project from NTPC, a super critical thermal power plant coming up at Singrauli in Madhya Pradesh. Now, on the back of that, when you're looking at BHEL today, remember industry sources earlier and we too had reported that BHEL surprisingly had emerged as the sole bidder to go ahead and construct the entire thermal power plant. And on the back of that, have a look at BHEL. The stock is up over 10% in the session today. So market believes that BHEL is well placed to get this particular order win. So far, the update has not yet come on the exchanges in terms of who has got the order, but BHEL on the back of this particular development surged over 10% today.
Oh, yes, 11.4 as we speak. Thank you very much, Vivek, for joining us. NTPC also up 4%, very reminiscent of the 2004 to 2008 period when every time there was a power plant announced, and many were announced, we saw BHEL take huge strides as the biggest turbine maker. Well, this is action replay. One hopes it continues in that trajectory. We wrap up on Bazaar on that positive note. Chartpast is coming.